Hey there, and welcome back for another segment of Retirement Essentials. This short video that I want to share with you actually was recorded in the height of the COVID-19 quarantine. So the video was actually recorded from my home. So forgive the audio and video quality, but it's very valuable information, so I wanted to share it with you here. Make sure you listen to the end because I'm going to share with you the transfer options with your Roth conversions and the negative impact that might happen if you do it the wrong way. So this is the 3 big mistakes when doing a Roth conversion. So we'll see you in the training.
Hello, everyone, and welcome back to another Facebook Live with me, Devin Peterson, from Brighter Wealth Academy. Now, in today's video, what I want to be able to share with you are 3 of the most common mistakes that are accomplished when it comes to making Roth conversions. And so as I walk through this, I want to be able to give you the right type of perspective and context for moving forward and making quality Roth conversions. Because all of you know that I'm a big fan of tax planning, and a penny saved is a penny earned when it comes to retirement finances and saving in taxes. And so the things that I want to share with you here in this video are 3 specific big mistakes that are made when it comes to Roth conversions. And so the first one is when to convert. We're going to dive into that one here in a minute. The next one is how to convert. And the last one is where to convert. So all 3 of those can be extremely valuable when we're planning for your Roth conversions. So the first one I want to mention is when to convert. When is the most ideal time to convert our IRA funds or our tax-deferred funds into a Roth IRA? Well, part of this when, really, part of the mistake around the when is misunderstanding the deadline. So all of us are very familiar with the IRA or Roth IRA contribution deadline, which is April 15th of each year. However, that is not the same as the conversion deadline. The conversion deadline is at the end of the tax year that you're wanting it to count as taxable income or conversion income. And so it's December 31st of that specific tax year. Now, the reason why this has made the list as one of the biggest mistakes is if you mistakenly convert between January 1st and April 15th, thinking that you can backdate it to the next year, that oftentimes can increase your tax bracket because it's counted as taxable income in that specific year. So big mistake that you want to avoid. Make sure you understand the deadline is the end of the year, not the April 15th. Now, the second part of this when to convert, one of the biggest mistakes is really understanding that you want to convert at a higher tax bracket. Now, let me switch over on my screen here to help you understand a little bit more about the value of a Roth conversion as a reminder. So a Roth conversion is when you go from this left-hand side, the IRA, into a Roth IRA. And so if you see the orange arrow at the top, that's a conversion that you're making from the top. This is different from your contributions, which they are made from the bottom going up, and those have limits of $6,000 to $7,000 per year. A conversion is when you take from an IRA balance and have an unlimited conversion amount into your Roth IRA. And so it's 100% taxable in that specific tax year. And so when we come back to the higher bracket version of the plan, is you want to make sure that you're converting from an IRA to a Roth IRA when you have the smallest tax bracket possible. Now, what do I mean by that? I mean that if you are in a 22% bracket today, however, you know that, or you're able to figure out that in 5 years you're in a 12% bracket, it would be a big mistake to do a Roth conversion in today's 22% bracket, knowing that you could save 10% in taxes by just waiting to do that same conversion 5 years from now. Now, the win of this big mistake is understandably so, because most folks don't really have the tools or the resources to look that far in advance. Let's say you're 5 to 10 years from retirement. Not a lot of folks consider all of the moving pieces behind their retirement finances 5 years from now and what that might look like. Here at Brighter Wealth Academy, we've actually put together the course called Retirement Taxation Masterclass. That's exactly what we do, is we help you understand your tax story, meaning where you are today, when you retire, and a couple of chapters into retirement, and to be able to decide, is there an opportunity for lower taxes in the future? And so that's a big mistake, is converting it when you're in a higher bracket as opposed to when you are in a foreseeable lower bracket. So, number 2, biggest mistake is how to convert. So let me share with you my screen again so I can help you see and understand the how-to behind making these conversions. Now, into making these Roth conversion transfers, the default option is actually just to have the IRS withhold your tax withholding when you make that conversion. So really, you have 2 options when it comes to making that conversion into retirement. As you can see here on the left-hand side, the first version is taxes paid from the withholding. If you recall, when you make that conversion, it's counted as a taxable distribution in that year. So mistake number 1, and this is mistake number 1 by default, because when you do a Roth conversion, oftentimes you'll convert $10,000 from your IRA into your Roth IRA, and the IRS will just withhold that amount. So let's assume that you're in a 22% federal bracket, and they withhold that $2,200. In this conversion, you're only taking $10,000 and adding in $7,800 into your Roth IRA. Now, the more powerful way to do a Roth conversion is to find an outside source to actually pay those taxes. So you can see on the right hand of your screen that you can find a way to pay the taxes from savings as opposed to withholding it. So in this scenario, you're able to take a Roth conversion of $10,000 and move that full amount into the Roth IRA and maximizing the amount that you can stuff into that Roth IRA per year. Now keep in mind, you'll have to pay the $2,200 of taxes owed from a separate account or a savings account, but this oftentimes is a really good tax planning strategy to maximize how much is actually going into your accounts every year. So that is the number 2. That is the number 2 mistake, which is how to convert. So definitely consider not withholding the taxes and paying the taxes from savings to maximize that Roth conversion. Now, the third is a little bit different. This is where to convert. Now, let me kind of set the stage. Most folks, when they have an IRA and a Roth IRA, most folks kind of have allocated that to the same type of investment portfolio, which does not have to be the case. You can have these in different type of risk tolerance portfolios. In fact, the most optimal way, in my opinion, is to have the Roth IRA allocated into a more aggressive portfolio than the traditional IRA. Now, why would that be the case? It's because you have this Roth IRA that you have on purpose kicked the IRS out of the ownership of that account, meaning that all of the principal and all of the interest moving forward is solely owned by you and you alone. And so having your Roth IRA being more aggressive and your IRA being a less aggressive is a common best practice inside of your retirement portfolio to really maximize the benefit from that overall. And so the most common mistake is actually when you take an IRA and convert it into a Roth IRA that is more conservative than the IRA. So simply put, and kind of recapping what we talked about, so the number 1 mistake in a Roth IRA is when to convert, meaning kind of knowing when you are in the lower bracket. Number 2 is how to convert, meaning find an outside tax source instead of withholding it. And number 3 is knowing where to convert those funds into, meaning putting those into a more aggressive portfolio that can really help you maximize the tax-free growth inside of that account. Awesome. Well, thank you so much for joining me inside of this quick Facebook Live. I did want to point you to the production of our Retirement Taxation Masterclass that really helps you understand the most ideal timing and the amounts for your Roth conversions. So that can be a powerful tool for you as you move into and through retirement to really get your retirement taxes and do it just right. So thanks for joining you, and we will see you next time.